The evolution of bonds and bond mutual fund products. If specialists deal with one market variable, how can one person or even a team deal with and correctly anticipate a multiplicity of variables to outperform the single variable product? I have yet to meet an expert who can correctly anticipate one of these variables all of the time, let alone all of them all of the time. An error of any size in just one will offset the correct anticipation of the other variables. You don't need the headache. Keep sight of the goal. Take a moment and consider the evolution of bonds and bond mutual fund products. Bonds, U.S. government bonds, secured U.S. government bonds, insured secured U.S. government bonds, short-term insured U.S. government bonds, short-term insured corporate bonds, short-term insured secured corporate bond fund, short-term insured secured managed corporate bond fund, long-term insured secured managed corporate bond fund, long and short-term insured secured managed corporate bond fund, domestic long and short-term insured secured managed corporate and government bond fund, domestic long and short-term insured and uninsured secured and managed corporate and government bond fund, domestic long and short-term option writing insured and uninsured secured managed corporate and government bond fund, domestic long and short-term option writing insured and uninsured secured managed corporate government bond and junk bond fund, closed-end domestic long and short-term option writing insured and uninsured secured managed corporate government bond junk bond, closed-end domestic and foreign currency risk long and short-term option writing insured and uninsured secured managed corporate government bond junk bond fund, closed-end domestic foreign multinational currency risk long and short-term option writing insured and uninsured secured managed corporate government bond junk bond fund, the ultimate fund, listed, managed, closed-end, domestic, multinational, foreign, option writing, currency risk, long and short-term, insured and uninsured, secured and unsecured, managed and unmanaged, corporate bond, government bond, junk bond, and municipal bond, balanced, lotto, Kentucky Derby, Las Vegas Keno, contrarian versus contrary diversified bond fund. Bond fund faults. Ongoing management fees, 1% more or less. Commissions, 0% hidden to 7%. Premium bonds, income includes return of principal. Wrong bonds, bonds with appealing yields, but flawed structurally. Wrong bond maturities, inefficient use of capital. Wrong qualities, bonds with qualities below your risk tolerances. Derivatives, covered call writing and looking for trouble. Enhancements, margin, and playing with the market. Foreign bonds, currency risk. No portfolio maturity date, no certainty of return of capital. Bottom line, there is absolutely no situation whatsoever that justifies buying a bond mutual fund. If you like, go to the link above to learn more about bonds, selection, and management.